Hey guys, what is going on? Welcome back to my Robinhood portfolio. Today I'd like to talk about some good growth stocks that can be utilized in a buy and hold strategy. Essentially, you buy the stock and then you hold it for the long term without having to worry about buying and selling the stock ever again. As you guys know, I'm a big proponent of buy and hold strategies, especially for new investors or investors who don't want to do a lot of day-to-day management within their portfolios. You simply buy a stock and then you add to your stock holdings in either a dollar cost averaging way or a value cost averaging way, basically putting in additional shares of that stock into the portfolio on a very regular basis, and over time you build up your holdings within the stock looking for good growth in the long term. And by growth I mean capital appreciation, the increase in the price of a stock. As you guys probably know from my prior videos as well, growth stocks typically have a little bit lower dividend yield just because they're taking their net profits and not giving back to the investor in the form of dividends, but putting back into the company to grow the company and a growth strategy. So basically, growth means price increase of the stock. So you don't get a good dividend, you don't get a regular dividend, but you do have very good potential for capital appreciation, growth in the price of the stock over the long term. So having said all of that, let's kind of take a look at 5 great stocks I think would be perfect buy and hold stocks over the next 10 to 15 years. Again, looking at more of a growth-centric return rather than looking at dividend yield return. So the first stock here is Amazon. As you guys probably know, Amazon is taking over retail. You can see on the bottom there, it's a very large conglomerate of different market segments, different company segments there. You can see 4 primary customer sets: customers, sellers, enterprises, and content creators. Very, very large company. I would not be surprised if the federal government at some point did not step in and talk about antitrust legislation with regards to Amazon. It's really having a huge impact on the retail sector right now, but again, it could probably start cannibalizing a lot of other segments as well. You can see it in the middle here. Earnings have been phenomenal. Earnings per share have been great over the last 4 quarters here, and traditionally have been great and increasing over the last few years. Dividend yield, as I talked about, growth companies typically don't have any dividend yield at all. Some do have a dividend yield, but they're very, very small. You can see Amazon here, the dividend yield is 0. The PE ratio, again, with growth companies, it's going to be very, very high just because investors are essentially buying the stock for the long term. They're basically willing to pay more per share now, knowing that in the future the company has great growth potential. So that's really what a PE ratio means, price to earnings. For every a dollar in earnings, how much is the investor willing to pay? And you can see here $179 per every dollar of earnings. So that's quite high. But again, a lot of these growth companies will have very high PE ratios because investors are not looking at current earnings but expected earnings in the future. So they're willing to pay a little bit more for the company now, expecting good growth moving forward. You can see it's a huge company, a very large company, $455.85 billion. And if we go up to the growth charts up here, the graph, you can see over the last year 32.11%, over the last 5 years 324.4%. Again, this will characterize the growth stocks I'll be talking about. They'll have very, very good 5-year growth, as you would imagine with any company that is growth centric. So that is Amazon, one of the better growth companies I think moving forward. Again, there may be some negatives with regards to antitrust legislation at some point, but for right now, Amazon is a very, very good company, one of my top 5 growth companies. The second stock here, AAPL, Apple. Everybody knows Apple. On the bottom here you can see it's a very large company, and aside from some of its personal consumer products, iPhone, iPad, so on and so forth, it also has very large operations in other market segments. You can see here that the earnings have been phenomenal, even better than Amazon. You can see $1.39 all the way up to $3.36, quite remarkable. Apple is a little bit different. It did start doing a dividend a couple of years ago, but before that it was growth centric. You can see the dividend yield is not that bad actually, 1.934. The PE ratio is a bit lower than Amazon. Apple is really starting to enter the curve of a more mature company, but it still has a lot of growth potential moving forward. You can see it's one of the largest companies in the world, $774.03 billion. Not quite sure if it's still the largest company, but one of the top 2 largest companies in the world. If we go up to its graphs here, you can see over the last year, 53.33%, and over the last 5 years, 83.75%. So not as good as Apple, but still a very, very good growth company moving forward. The third company, again, these will be companies that I'm sure all younger investors will know about. Facebook here, I really don't need to tell you what Facebook does, but it's the leader in online communications. As you can see there, has a number of different market segments. Interestingly enough, it has bought Instagram, it has bought WhatsApp, so it's really bought out a lot of its rivals. You can see very, very good earnings here. Again, with the growth company, the dividend yield is 0 here. The PE ratio is a little bit higher as well. This is still a very good growth company, still in its infancy, I would argue. 39.27 for PE ratio, a very, very large company, 430.15 billion. If we take a look at its charts as well over the last year, 30.3%. Over the last 5 years, 362.49%. So a very, very growth-centric company. Again, very good performance over the last 5 years and no dividend yield. The fourth company here, a little bit different company, and we'll kind of talk about the shares here. You can see Google here has actually 2 shares, GOOGL and GOOG. A little bit interesting reason for this. GOOGL is the Class A shares. That's the typical class of shares that the company had. It did split off into a Class C shares, GOOG. And there are another class of B shares, but are not tradable. These are typically held by the insiders in the company. Sergey Brin, Larry Page, the co-founders of Google, hold these shares. They have a lot of voting rights to them. But the interesting part is that the founders of the company wanted to keep control of the company. So Class A shares, the GOOGL shares, have 1 voting right per share. Class B, again, that are not tradable, have 10 votes, and Class C shares, GOOG, have 0 votes. So a way of keeping control of the company in the hands of the founders. A little bit interesting how they did that, but essentially there's 2 different shares here. GOOGL, you can see 919, and GOOG here, 898. The Class A shares, the other ones, GOOGL, have a little bit of price premium just because of the voting rights. So there is some value with voting rights. But again, 1 vote versus 10 votes for the Class B shares that are not tradable. So just a little bit of the history why there are 2 different classes of shares for Google. If we go to the bottom here, you can see this is a conglomerate company. We probably know Android and some of the Google devices, search, but it has a whole host of other underlying companies. It's always expanding, acquiring different companies. You can see in the bottom there, acquisitions, Calico, Fiber, Nest, Google Capital, a lot of different things, lots of different investments that Google has been making. Earnings have been phenomenal here as well. You can see 968 at one point, Q4 2016, Q1 2017, 750 or so. Again, the dividend yield is 0 here, as you would expect for the growth company. The PE ratio is a little bit higher as well with the growth company, 30.36. Very, very large company here. I think this is the second largest company, 622 billion. Actually, with the other shares, probably the largest. I think Google is now the largest. Apple is second. I could be wrong about that. Let me know in the comment threads if you have any insight into that. Over the last year, 29.08%. Over the last 5 years, 206.91%. So very, very good growth. So Google, very good company. I think this is a perfect company, the quintessential buy and hold company over the next 10 to 15 years. And the last company here is probably the most controversial company of all the companies I'll talk about, and that is Tesla here. As you guys know, Tesla is an electric car maker, but it's really trying to diversify itself into an energy business. It has its energy batteries, its home storage batteries, its new solar business, taking over Solar City. So it's becoming an energy conglomerate, clean energy, but right now its motor division is dominating its current efforts. It's got the Gigafactory that is still under construction. Its fledgling automotive industry, its Model 3 should be coming out later 2017, early part of 2018. So it's still really a fledgling business. As you can see there in the bottom, it does have some negative growth. Q2 2016 as well as Q4 2016, Q1 2017. It did have 1 quarter where it did post some earnings. Again, it's putting all of its net profits, well actually, as I just talked about, there's only 1 quarter of net profits, but it's taking capital. It's actually having to have massive capital influxes because of all its operations and all the development that's taking place. So very, very big growth. You can see there the market cap, 57.89 billion. The PE ratio is very, very large, not able to be shown here because, again, its earnings are negative. If there's any negative earnings, essentially that will be NA, because you cannot calculate that, and essentially that's an infinite PE ratio. So it's a very, very large PE ratio. Investors are willing to pay per negative income. So there's really no earnings per share. It's negative earnings per share. So as you can imagine, if you try to calculate that, it's essentially an infinite number. If you would put 0.0001 as a positive, essentially it's an infinite number for the PE ratio. So investors, even though that this company is losing money, are still willing to put money into the company. So very, very large, like I said, infinite PE ratio there. Large company as well, 57.89 billion. The largest U.S. automaker now per market cap. And if you go to the charts here, you can see phenomenal growth, 67.5% over last year, and over the last 5 years, 1,035.42%. So very, very good company. If it's able to maintain its momentum into positive earnings, if it's able to really survive the next 5 years or so, it's going to be basically a monopoly energy business, clean energy business, monopoly electric cars. I know there's a lot of companies trying to put out their own versions of electric cars, including Ford Motor Company. GM recently has the first U.S. production, or what I would call the first mass production electric car, the Volt. But again, still fledgling electric business. Very, very high risk with this company, but over the long term, if it's able to survive, I think this has the best growth potential. So 5 companies here, growth companies for buy and hold strategy: Tesla, Google, Facebook, Apple, and Amazon. I think these are companies any new investor, any established investor cannot go wrong with. You simply buy these companies, you hold these companies. You don't need to even worry about these companies. You simply add to your portfolios in either a dollar cost averaging technique or value cost averaging technique. Over time, you have very, very good growth potential. Again, not focusing on dividend returns, but more of growth-centric capital appreciation over time. So those are my 5 top growth stocks. Let me know what you guys think about those picks, if you would replace any of those with a different company, if you agree or disagree. I think they're quality companies. And in my E-Trade and Vanguard accounts, I have all of these companies. I have rather large holdings on most of these companies in my other brokerage accounts, as well as index funds. As you guys know, I love index funds and I love growth companies. So these are the 5 top growth companies I have. Let me know if you guys have any different companies. And kind of with that, I'll end the video. As always, if you guys enjoy my videos, feel free to like, share, and subscribe. Building the channel. Really appreciate your guys' support. The channel really wouldn't be possible without your support. Again, if you guys have any great comments, constructive criticism about this video, other videos, about the channel, please let me know. Always open to trying to improve the channel. And if you guys have any great content, any great video ideas, stocks you're taking a look at, investment strategies, cryptocurrency, penny stock investing, whatever it may be, let me know. I'm always interested to learn about investing, real estate investments as well. Getting into real estate, I'll maybe start putting some videos out about some of my my real estate investment properties. But yeah, anything really about investing, always interested to do some reading about. So if you guys have any great video ideas, let me know. And kind of with that, I'll end the video, and we'll see you guys.